Hello, this is Richard C. Wilson at the Family Office Club, and today we are doing a investor mandate interview with Greg. Welcome, Greg.
Hi, Richard.
So, what type of an investor are you in terms of your day-to-day perspective and the types of activities you do as an investor?
Sure. My focus is predominantly private market investing. We have two dedicated pools of capital for our clients. One's more orientated towards growth equity, so private equity, growth equity in nature, and the other one is more involved with the yield orientation, so private credit, factoring, etc.
Okay. And what locations do you prefer to invest in, or what size of deals, or what types of managers, etc.?
Location's not, most of our deals are done in the US, no particular region within the US. We've done a few deals in Europe, Western Europe, but that's about as far as our purview takes us. Size of deals, obviously, highly dependent on what it is, but on the growth equity side, typically we'll be part of a syndicate and our check size is anything from 1 to 5 million on the equity side. And then on the credit side, it's a little bit larger, can be anything from 10 to 20 million. Um, yeah, that's
Okay.
about it. Also, our preference is generally for co-investment deals where we like to follow someone into the deal, but
Yeah.
more of a direct as opposed to a fund investment.
Okay, great. And then if you were thinking about what would be the number one most valuable thing to source through our investor club, deal flow wise, what is the strategy or manager type or size of investment, et cetera, that'd be of most interest, above everything else?
Yeah, as you know, when we're recording this, the world is pretty much frozen as
Yeah.
far as what what's going to be good opportunities coming out of the coronavirus versus what's going to be poorer opportunities. So we've definitely turned our focus more towards distressed debt investing.
Hmm.
Again, more on the co-investment side as opposed to direct fund investments or fund investments. Started to look at energy, but energy with some of the larger fund groups, and that's probably where we would do a fund, and somewhere where we can get conviction around the manager being able to kind of spread their investments over time because we just don't know where this will all end with energy. Always interested in growth equity businesses, businesses that are EBITDA cash flow positive, but really need sellers to understand that valuations have changed and just can't um, be where we
Right.
were about a month ago. So that's about it. Also looking, I'll preface this, I say mostly involved in private markets, but on the public market side, we've become increasingly interested in some credits that are out there and some mortgage-backed securities.
Right. Right. Okay. Great. Well, thank you for that description. I'd be happy to keep in touch. We're seeing a lot of interest in distressed deals, and it seems like the longer that we stay in this bad situation, obviously, the more that some of those asset owners will realize that every dollar right now is worth $1.30 or $1.40, or
Right.
it depends on what niche you're in. But
Hmm.
a lot of unknowns right now. But we sent out a note to our club asking for deal flow, and we have some that are coming in from that big email blast. So be happy to keep in touch. And then as you probably already know, we're doing our weekly virtual discussion panels. We do weekly webinars, and we're doing some investor pitch panels. So I'd be happy to keep in touch that way as well. My
Hmm.
final question here, though, is about your biggest piece of advice for an investor who's listening to this right now. Maybe something that could make or save somebody $100,000, maybe in wasted fees or avoiding a bad deal. Maybe something that you wish you would have known a decade ago or 15 years ago that you could share with investors who are listening here.
Sure. Gee, the list of mistakes is never ending, I guess. But no, certainly, probably in this period more than others, it's warranted. But I would say do your due diligence. Go into the detail, look at the financials, ask for audited financials if there are any, and just don't be uh, swayed by the huge opportunity set that some investment may present itself right now. So continue to do your due diligence. Again, just look at the numbers, spend some time studying the investment, and go into the detailed side of the investment. It will never really be time lost, but it certainly can be money saved.
Right. Yeah. We've had probably 20 or 30% of the 20 to 30% of the comments have been on going really
All
deep
right.
or strong on due diligence. So
Good. Yeah.
obviously it's a common trend. I think it's something that we're going to be talking about more and more at the Family Office Club, so we can help investors kind of collectively have better due diligence or more deep due diligence resources across the board through our club. So maybe that's something we can trade notes on as we develop those resources.
Right.
Yeah, great. And then what's the best way for someone to get in touch with you? Is it via email or LinkedIn or?
Both. So LinkedIn, I'd be slower to respond, but email. My email is g.com, and email is probably the best way to get hold of me. And trying to direct call me is probably the worst way to try and get hold of me.
Great. Okay. Well, thank you for your time here, Greg. And hopefully when our live events start up, we'll see you at one of those again soon.
Yeah. Take care, Richard. All the best. Good to talk to you.
Take care. Stay healthy. Bye.